Good afternoon, everybody. I think we are ready to go. Just had a few technical problems. Don't know why. Haven't done this for a few weeks. Haven't touched anything. Start it all up, and nothing seems to work. But hopefully everything's working, and you can hear me okay, and all of that stuff. So welcome to the live stream. If you've never been to one of these before, I normally do them every Friday. I've been away for a few weeks. Back into it again now. Interesting week as usual. This is the S&P. That was the move on Wednesday off the back of the inflation data. I did buy the S&P about an hour ago at 54.08. I thought it was an interesting trade. And so far that's doing okay. But to explain how this works, if you've never really seen it before, we'll talk about the major announcements due out next week. We'll look at the usual mix of markets, indices, currencies, gold, oil, crypto, maybe some commodities, anything. And then if there's any stuff you want to look at, if you put it in the chat, I'll take a look. We'll take a look at those things when we've done through all the major stuff. Sorry, I'm so disorganized now. I haven't done this for so long that I haven't even got my PowerPoint presentation open. So there we go. Let's get all that going. But that's it. So let's get going before we look into these markets in a bit more detail. Let's just get the housekeeping done and go through that. The risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. There we go. That's that. Just a quick word. I'm doing a webinar next week on options on Wednesday evening. I've traded Wednesday evening UK time. I've traded options for about 15 years, mainly on the S&P. So next Wednesday, I'm doing this session. It'll start at 6 o'clock in the evening UK time. I think it'll take a couple of hours because it is a bit of a complex subject, or it can be. All I'm going to talk about is understanding options trading, the basics of options. When we're looking at an option, what are we looking at? What's the strike price? What's time to expiry? What will affect the price of the option apart from the underlying market. Why options are usually not good for trading market direction. I started trading options badly in the early 90s, and I find it so frustrating that I'd be right on market direction but wouldn't make as much as I thought I should from the options. So we'll talk a bit about that. They're very popular in the US options because they don't have contracts for difference and spread bets over there, but very frustrating. It can be using them for market direction, but that doesn't mean they're bad. There's just lots of different ways you can use them. So I'll talk about other option strategies as well. And of course, how to manage risk using options. So how to manage the risk of being in the options trade, but also how you can manage risk on other trades you have using options. So that's all going to be next Wednesday at 6. I've started writing it this week. What's the catch? The catch is you've got to be in my WhatsApp group to attend it. So with the WhatsApp group, you get daily updates from me anyway on what's going on in markets, all that sort of stuff. I'll give you details on how to join the WhatsApp group as we go through. But even if you're in the WhatsApp group for just 1 month, as long as you're in it by Wednesday, you'll get access to this exclusive webinar on Wednesday evening. So let's take a look ahead to what's happening next week. So Tuesday, clearly we've had a lot of news this week. Next Tuesday, we've got the Australian interest rate decision. Wednesday, we've got UK inflation data. And Thursday, it's the UK interest rate decision. So probably Wednesday, I would say, is probably the bigger event there with that UK inflation coming out. We saw the reaction by markets to US inflation this week. So I think that'll be interesting. see what that looks like. The WhatsApp group I run, I do a daily update. I do 2 daily updates. I do one in the morning. What's going on in markets? What trades am I looking at? Markets I'm watching, trades I'm running. Q&A, if anyone has any questions, they can fire them in throughout the day. Then I do an update in the afternoon ahead of the US Open, or when markets have been open for maybe an hour in the US, sort of my thoughts on index trades and also US equity trades I'm running. I've talked a bit about my US equity trading this year. At the moment, I've got about, I'll have a look now, 41 open trades on US stocks, and really just looking to run them from a more medium term point of view. So there's all sorts of different time frames that I talk about within the WhatsApp group. And like I say, as long as you're in the group, you can have access to this options seminar next Wednesday evening, which is worth far more than just 1 month subscription to the WhatsApp group. If you go to my website, the link is in the description down below. It's davidjonestrading.co.uk. If you go to subscribe, you can have a look at the trading courses I run, and you can subscribe to the WhatsApp group. If you use the code YouTube, you get 20% off the first month. Okay, so that's it. And you'll get invited to the webinar thing on Wednesday. Right, that's what it looks like, a snapshot of what the WhatsApp group looks like. I've got 5-star Trustpilot reviews. I do a newsletter that I haven't written for a few weeks because I've been away. I'll start doing that again this weekend, and it's all on the website, davidjonestrading.co.uk. Right, that's it, isn't it? Let's get into it. So there's the webinar, blah blah blah. Let's get into the markets stuff and see what's going on. Hold on a second. There we go. Oh, that little S&P trade's doing okay. Very good. So let's start off with indices. You know, it's been, what can you say? I say what I say every time, don't I? The trend is up. And the trend is up. I want to be a buyer of the dips. I didn't get a dip this week. I did buy a dip when I was away. It was I must admit, because I was in time differences, I was 9 hours ahead. So it was sitting in a bar in a hotel trade. But I did buy the S&P at the end of May, Friday the 31st of May. What were those numbers? I can't even remember what the number was, but whatever it was. It wasn't payrolls, was it? No, it's something else. And I did manage to ride it up till yesterday. So that ended up being pretty good. But since this week, we've not had much in the way of dips, have we? Since we had that massive move off the inflation data. But that's what our trend looks like in the S&P. The trend continues. We are a long way away from this trend that started in October 22. So this market could absolutely weather a bigger sell-off and still be in an uptrend. But for now, I'd be a buyer of the dip. We're going to come to European markets in a sec because they are interesting. But, same old for US stocks. There we go. NASDAQ, same old again there. So again, for me, I'd be a buyer of the dips. There is this concern at the moment that so much of the rally in US stock indices is concentrated in a relatively small basket of stocks. And you see that when you look at the Dow, there we go, the Dow, very different picture. So NASDAQ, S&P, just below their all-time highs. The Dow is about 500-600 points below all-time highs. So a very different makeup there compared to these. But these markets are still going up. Some of the stock, let's see, which of my stocks are moving so far today. It's only early doors. What's the biggest rise? It's only at 1% though. Netflix, I've been in Netflix for a while. That's breaking out to, it's not all-time highs, but it's a new high today. Nothing else is moving that much so far. It's a bit of a muted open by the looks of it. Anyway, so there we are on US stocks. Yeah, the market is still going up. I want to be a buyer of the dips. Let me change the scale on here. I normally do this before I start to make things a bit more readable. Like I say, I'm a little bit out of practice. There we go. So same old on US stocks. Japanese stocks, it's been a funny one, the Nikkei. We've got lots of trends on the Nikkei, going back to wherever that goes back to. Is that the COVID low? COVID lows. And then the market accelerated from October last year. And we have this new trend. And it's just hugging this trend line, isn't it? The trend is still up. I'd still be a buyer of the Nikkei, based on the daily chart. I probably want my stop the other side of 36.7 or something. But you can see it's it's not really getting that much of a move on. I'll do the Hong Kong market, then we'll look at the European markets. I'm quite interested in this. I don't think I've ever traded it, but I think it's quite interesting what's happening from a more longer term point of view. And I was thinking that maybe it's a long term ETF in the pension sort of thing. But we've had this massive downtrend in the Hang Seng since Feb 21, and even you go back to Feb 18. So Feb 21, down, makes a low in October 22, rallies, but just falls again. But what's interesting is that it has held in Jan of this year, held above that old low from 2022, and it's broken out the downtrend, and we've had a good run. And since then, it's been selling off. So I would like to buy the dip in the Hang Seng from a more medium-term point of view. But at the moment, it is still dipping. But I think that's an interesting market for me to watch, just from a are we turning round this massive downtrend point of view. So let's see what happens with that. So yeah, I think that's an interesting one. Now let's have a look at these European markets. These are moving very differently to US markets at the moment. There's the DAX, for example. There's the old CAC 40, the Frenchies. The Italians, mamma mia, absolutely clobbered. And what's moving these markets, according to the media, are what's happening politically. We had Monsieur Macron announced this surprise election on Sunday that no one was expecting. And it's the rise of right-wing or far-right parties, depending on where you sit on the political spectrum. Let's not get into the ins and outs of that. That have spooked markets over the last week or so. And it's interesting, I think. So to me, I don't really care about the political side of it, but for me, it's interesting. Is the market overreacting? Are these European markets, continental European markets, overreacting? Someone's saying the screen is very blurred. I've got it. I'm looking at it on an iPad, and the charts look okay, but I can't read the stuff here very well. So as long as the charts look okay, it should be okay. I don't know what happens today. I have to have a fiddle with it. But let me know. Hopefully it's okay for most of you. So these European markets, is it just a correction before the markets move higher? Or are we actually seeing a shift in sentiment by European investors because of what's going on politically? I don't know. Here's the DAX. Anyway, the German market. I think it's an interesting market next week. I am leaning towards the market's overreacting. So I want to be a buyer of the dip. That's the trade for me. But I don't want to buy it just yet because the market is still sliding. But I think it's a really interesting market. These European markets are interesting to watch into next week to see if we do see these sell-offs stabilize and things turn around and we have a bit of a rally again. I suppose if we saw US markets continue to gain, it would be strange for European markets to stay under pressure. But let's see where we are next week. So I think the DAX, the Italian, the French markets are interesting ones next week. There's the DAX. So these old lows maybe 17.6, 17.7 next week. 300 points or so below where we are now. Let's see, does the market turn around? The old Frenchies, the French market's taking a right clobbering, isn't it? Sacre bleu. So 82.55 to 7,500. The market's dropped 1,000 points in a month. It's a big old move, isn't it? That's a 12%, almost 12% move. That's a big sell-off. So the French market, and perhaps understandably because there's perhaps more political jitters in France because of that surprise election. But that's interesting. There's the French from September 22. I think that's quite interesting to see what happens next week. These let's call it there's 72 to 74 area next week. Let's see what happens. So we'll have to have a look at them again next Friday when we're doing this and see if things have stabilised. But I think it's interesting to watch what's going on in these markets and the Italian as well. The Italian market had a great run this year. Came into this year just above 30,000, hit 35.5, and now we're down at 32. So that's a market that's dropped almost 10% or so since the highs, and you can see the size of the candle today. So again, interesting markets going into next week, and I wouldn't normally say that about the European markets because they tend to just follow, most of the time what's going on with the US. So let's see where we are next week. So that's stock markets. Quite a lot going on there. Other markets, other things that are interesting. There is lots of things that are interesting. Bond markets. US Treasury bonds. So UST bonds, if we go back, they've been in a downtrend since the COVID highs for the bond market. So if I flipped it up like that, it might look something like that. And that downtrend is still intact. But the sharper downtrend from here that I had on before, that has broken. So it's interesting. In the short term, I'd be a buyer of bonds, but I wonder, or I'm expecting, the longer term trend to reassert itself. Let's see. Obviously, clearly, very much an inflation and interest rate driven market. But I thought that was an interesting one today. What's going on in bonds and the dollar? I didn't trade this. I think there was a trade to do on that move. That was the move. This is the hourly chart now. That was the move on the inflation data. This 104 has been a floor for the US dollar. There we go. If we bring that chart up, going back to April of this year, 104, 103.80, 104 has been the low for the dollar. That was the move on the inflation. It's turned around, and here we are at the best levels for about 5 or 6 weeks. So the dollar has bounced back. It's still sideways overall, but for me, the trend for the year is still up. So I'd still be a buyer of the dips of the US dollar. And of course, what's going on in the US dollar, feeds through into so many different markets. So I was talking about the euro this week in the WhatsApp group because we had the move. This is the Friday night open. This is the hourly chart. And the euro gapped lower in response to Macron's election call, which was a surprise. But what I thought was interesting, it did hold above the 107.20 lows from the 9th of May. And they were big lows. We saw the market rally 200 points off that level. Rallies on the US inflation data, but it's completely blasted through that low now. So we've got the euro at its lowest since the beginning of May. With dollar strength and political uncertainty playing its part there. I mean, it's pretty sideways overall, the euro. That's the last year or so for the euro. We've had a big sideways range, no real direction. But you can see, the impact some of this stuff is having on all sorts of different markets at the moment. I don't have that much of an opinion on a lot of currencies at the moment. Pound against the dollar, again, that's been hit by the, the dollar strength. If we take the dollar out of it, I think some of these markets might be interesting next week. There's sterling against the yen. Briefly hit fresh all-time highs today before reversing sharply. So that could be a buy the dip market for next week. Sterling yen, I would be stopped below here. Whatever that level is, let's call it 197. So that's maybe an interesting market. But it's turned around. What's that, 250 points today? So it's a big move there. Similar move in Swiss yen, but that has bounced back. So Swiss yen, all-time highs in Swiss yen. So loads going on today. Not a lot jumping out for me, apart from that S&P trade. I did the S&P trade. Just treating this move pre-market as a false break below yesterday's low. And I've got some options trades on at the moment on the S&P. So going along the S&P made sense. So yeah, there's but not much else really for me at the moment. Gold, again, I mentioned that this morning in the WhatsApp group. We're seeing this 22.77 level hold on gold. We did have an all-time high again in May. So again, I'd have to be by the dips on gold at the moment. But just a bit choppy overall. But yeah, I mean, that level, there you go. You can see how clear a level that has been. Silver, I've not looked at silver at all for a few weeks, but we had that run above 30, so that was some multi-year highs. So that was the best levels in about 11 years, and it has come off again. But I suppose it'd have to be buy the dip on silver as well when the dip stops dipping. So that might be an interesting market to watch next week. That's that. Copper, I am still long copper. I bought copper. I'm underwater at the moment on the copper trade. I've got a stop below 437. That's an interesting market to watch, I think. You know, we had all-time highs briefly on copper in May. Let's see what happens around these lows. Does the market bounce back? So I think that's a pretty interesting market to watch next week. And oil's in. I'm not quite sure with oil, but on oil, this trend is down since April. So we're 2 months into this downtrend. But you can see it's threatening that downtrend line at the moment. For me, I'd still want to be short oil, but it's still too strong. I'd have a stop above 81 at the moment if I was going short oil. But we can see there's the hourly. I mean, it's calmed down a bit over the last couple of days. Let's see what happens. But I would still like to be short oil, but it's still holding up for now. So again, for me, that's maybe a trade for next week is oil. Natural gas, Widowmaker. I'd have to buy the dip on natural gas. Traded above $3 this week. You know, we've seen a big run off the April lows. Always a volatile market. The closest I would want my stop, probably the other side of 270 if I was trading natural gas. But interesting to see if that resumes next week. And I think that was it, really. That's it. There's a few other little bits and pieces that are interesting. I had a look at aluminium this week in a WhatsApp group. I mean, it's a market I've never traded, but it's a popular market with some people. You know, a big run, a 40% run in that since the December lows. And it's coming back. Are we going to see it recover and go back to those old highs? Let's see. But a few bits and pieces. But for me, the interesting stuff to watch is still US markets. You know, a lot of my focus and a lot of my risk is in US markets. So they're still interesting because of the moves we've had this week, because the trends are up, because we've had all-time highs. And these European markets now, because of what's going on with the political situation, the fact they're all getting hammered. Is it an overreaction, particularly this French market? Let's see. We didn't look at the FTSE, we'll have a look at the FTSE in a minute. But I think those are interesting markets to watch next week. And the FTSE, I mean, the FTSE as usual just does its own thing, doesn't it? FTSE, I'd buy the dip on the FTSE, I suppose. I don't know where I put my stop. Probably the other side of 8,000 if I was a buyer at the moment, the previous all-time highs. See if we have the flip from the old highs becoming support on the way back down. So a few bits and pieces to watch in there. But for me, stock markets very much the focus. Let's see if any of my stocks are doing anything drastic. No. No, Netflix is having a good day for some reason. Google, I've been in that for a while and I've added to that. Microsoft is one I've been in for a while as well, since the beginning of the year. And it had a good run initially and it stalled, but it's broken out again. So I'll be looking personally, I'm looking to add to my position in Microsoft. But otherwise, nothing too dramatic. General Motors, I mean, that's been a good trend in General Motors. And I am in that. It's just been clobbered the last couple of days a little bit. So we'll see. We'll see how that works out. So there we go. A few bits and pieces, I think, to keep an eye on next week. What we'll do now is take a look at some of the stuff you want looking at. But just a reminder, this webinar next Wednesday, understanding options trading, the basics of options, why the way most people use options isn't very good, other option strategies and how to manage risk, done by me who has traded options off and on for 15 years. If you're in the WhatsApp group, you'll get access to that webinar and it'll run for a couple of hours, probably 6 till 8 p.m. on Wednesday night. So if you're in the group, you get access to that. And to join the group, go to the website, details in the link below, and use the code YouTube for a discount. Right, let's take a look at some of the stuff you want looking at. Can we have a look at Zoom and DocuSign? Let's have a look at Zoom. So US stock Zoom, of course, a darling of the COVID era. Not so much at the moment. Oh, look at that. Wow. So it went from, where did it go? Around about $70 in the COVID lows-ish, up to $588 by October. It's amazing, isn't it? And then here we are down at 57. Oof! I mean, that is getting absolutely clobbered, isn't it? We're on new multi-year lows today. So for me, I would not be a buyer. I would be looking to sell the rally. So for me, that's the trade. You know, the trend has been down since 2020. Obviously, that trend has calmed down a bit now, but it is still down. And it's, you know, we did have this old 58 level holding it up, and that's gone. That's gone in the last couple of days. You know, so it does suggest it's still pretty weak, isn't it? So yeah. So for me, I'd be a seller of strength, and if it got back up to the mid 60s, I'd like to be a seller personally on that one because the trend is so down still. DocuSign. Look at that. What happened there? Again, is it the COVID effect again? No, it's not really, is it? Well, I suppose, yeah, down here was 2020 COVID. Again, so it's gone from, what, 300 to 50 odd dollars. It doesn't look as bombed out, does it, as Zoom? But overall, that's the last 18 months or so. It's just sideways, isn't it? And if you look at what the returns you'd have made, I would say, if you put your money in the S&P 18 months ago, compared to what you'd have made with DocuSign. So for me, it's actually quite a good candidate for an options trade, but it's just pretty sideways, isn't it? So for me, and it's in the middle of the range, so not much interest for me. You know, the top of the recent range has been 70, the low's been 38. Here we are at 51. You know, not far off from being in the middle of the range. Yeah, so if I had to do anything, I'd probably be a buyer with a stop the other side of 47.50. But with it being stuck in the middle of the range, there is not a lot of interest for me in that one at the moment until things get a bit more interesting. Can we have a look at CELH? CELH. Hold on. CELH. Celsius Holdings. What is it? Consumer non-durables. It's interesting, isn't it? That is interesting. That's the sort of stock that I might not buy it today, but I think it's an interesting one to keep an eye on. So for me, we had this great uptrend and the thing accelerated in January. It's been clobbered. What's it been clobbered on? It wasn't earnings. Don't know what it was. Anyway, so I'd still look to be a buyer. So I would be at the moment thinking, for whatever reason, the thing has dropped 40%. Has the market overreacted here? Is that what we're seeing? The market overreaction. But I'd be patient. So I think for me, it isn't one I'd buy today because it made a new low for the down move yesterday. Yeah, but I think it's interesting. And I would be, if it starts pushing below 60, I think it's an interesting one. So that for me would be one to watch rather than do anything yet. But yeah, it's interesting how much has been clobbered. And Baidu, whatever they're called, technology. Oh, that just looks a bit doggy to me. Again, you know, for me, the first thing I look at is the trend. You know, even today we're seeing new lows for this down move. We're seeing it trading down to an 18-month plus low. So yeah, so for me, no trade there. I'd still sell a rally. I'd want to go short that one. Would you recommend starting with foreign exchange or stocks? Which is easiest? Good question. I'd say in general stocks, and I'd say even more so at the moment because this is pound against the dollar. Foreign exchange has been pretty boring. Yeah, we've had some volatility, but it's been pretty sideways. So I'm a big fan of US stocks. I don't care about a 10-minute chart on a US stock like Microsoft. You know, I'm more about the dailies. So I would say have a look. You know, I would say if you're starting, you haven't done it before, let's join the WhatsApp group, have a look at my trading course. Most people lose, obviously, but starting with stocks and a higher time frame than most people start with is what I would advise. You know, my stock trading is profitable this year. It's not doubling my account every month, you know, but it's up well up for the year, and it's well up because of stocks like this, because I bought Microsoft whenever it was in early 24, and I've stuck with the trade, and it's up 10%, and obviously using leverage and everything else. So I would say definitely start. Ultimately it's up to you, but I would say starting with stocks makes more sense than starting with FX, and particularly because FX has been somewhat dull over the last year or so, or this year anyway. And with stocks, there's so much to choose from. There's always something moving. Let's see. Let's have a quick flick through. Some of the stuff I would look at today, and I'll look at a bit later on today for a stocks trade. I'm just bringing up another screen here just to see what stocks look interesting so far today. Apple, obviously. I was short Apple. I got stopped out of that. But Apple, because we're on the, got the breakout for Apple, breaking out to all-time highs this week on their AI thing. So that's interesting. AJG, Arthur J. Gallagher. I've been in and out of those a bit this year. That again is another great trend. What else have we got? Adobe, ADBE. Oof, dear me, that's gone a bit crazy. Maybe not that one. TJX, this is what I'm in at the moment. TJX companies, lovely trend on that. I've been in it a while again. Just have to be a bit patient, and it's really got to move on over the last couple of months or so. So yeah, I would definitely say stocks is a good place to start. What are your thoughts on AMD? AMD is in my list as well, actually. Advanced Micro Devices. I think it's a buy for me, yeah, because it had that. Let's just tidy this up a bit. It had that because it's a chip manufacturer, isn't it? But it's not doing the same craziness that Nvidia's doing. It did have a good run from November last year, $95 up to nearly $230, and it's all gone a bit flat since then, isn't it? So again, for me, I would be a buyer. So even though it's fallen out of the trend, I'd give it another chance, and the closest I'd have my stop would be the other side of 140. I think is what I would do. So yeah, I think that's an interesting one to keep an eye on. AMD. Piggybacking off AMD, what are your thoughts on SMCI? Is that the super microcomputer? That went nuts earlier this year, didn't it? What's it done since then? It's calmed down a lot, hasn't it? I'd still probably have to be a buyer. I mean, it went from, in Jan, $300 to $1,200 in March. So I'd be a buyer. I probably wouldn't really, but if I had to do anything, I'd be a buyer. And I'd have a stop at least under 670, which is a big stop, but it's a volatile stock, isn't it? The stop is almost 20% away from where it's trading now. And it's not actually done that much over the last month. It shows you the volatility, doesn't it? But it doesn't actually look that much on the chart, but it's still having some quite big swings. So for me, I'd be inclined to be a buyer, although I wouldn't. And you could also argue, well, has all the fluff gone out of this market? Has the hype gone out of this market now? I don't know. I'd rather trade sort of more ploddy stocks, to be honest. What's Nvidia doing today? So far today? Up again, look at that. Nvidia is holding up the whole market, isn't it? And that has done incredible. And what was it on? Nvidia, yeah. Nvidia, I mean, the trend is up on Nvidia, isn't it? I have to buy it and grit my teeth. I think the closest I would want my stop on Nvidia, perhaps the other side of the lows before the gap. So the gap earlier this week. So the other side of 116 on Nvidia, which is only, again, where it was, earlier this week. But I often say I have a real problem trading some of these runaway stocks when they get moving. But yeah, you can't argue with the trend in Nvidia, can you? I mean, that's just still going today. What's GameStop doing? GameStop, nothing. I think that's all been and gone. All that excitement there, isn't it? Part of me wants to think a massive correction is coming. I think that's always the temptation, isn't it? When you're talking about Nvidia here, yeah, I think it is. When you see these stocks that have done so well. But as the old saying goes, the market can stay irrational longer than you can stay solvent. So let's see. What do you think about Aussie Canadian dollar? Aussie Canadian dollar. We've looked at this before, haven't we? Because I've got trend lines all over the place on it. Um, I mean, it does look like it's reversed that downtrend, doesn't it? So I would be a buyer, I think. If I had to do anything, I'd be a buyer. The only question is, do you want to be a buyer here, or do you want to wait to see if there's a pullback? If I was a buyer now, the closest I would put my stop is the other side of 90. I think that to me looks a good area for a stop. You know, the May lows or the mid-May lows, I think. But yeah, so I mean the trend has been up, absolutely. It might be an interesting one for next week, and like I say, for me, a stop the other side of 90. Someone says they're sipping a Celsius as we speak. Okay, and what is a Celsius anyway? We looked at the stock, didn't we? Celsius. Oh, it is a drink company. Well, there you go. What is it? Energy drinks. Essential energy for an active lifestyle. There you go. So that's it, really. If there's no more questions, I think we're done. So, and it's interesting at the moment, particularly European stock markets with what's going on. US stock markets are interesting because of the week we've had. The trend is still up. Let's see what happens. I think an important level for today is whatever the low we've seen so far is. Where is it? Maybe down here. I think if the market, breaks this low and breaks, this is the S&P, breaks the out of hours low, we could see a deeper sell-off there. Let's see what happens. What's the Nasdaq doing? Just chopping around. But definitely these Euro markets next week, particularly that French market. Look at that. What's that done today? 77.20 to 74.85. So it's lost 250 points just today, 3% down today. So really interesting, I think, the old Frenchies going into next week, and just US markets because the trend continues. Otherwise, we are done. Thanks for the good thoughts about the holiday. Yeah, I had a really nice time. I was in Australia. Very nice it was as well. So yeah, but back to reality now. Back the right way up. So as usual, I'll be back next Friday. We'll have a look at things then, see what these European markets are doing. If you want to attend this options webinar, if you're not in the WhatsApp group, it'll cost you 40 quid to subscribe for a month. It's well worth it. A big. I don't talk about my options trading on here because it's a bit more specialised, but it's something I've done for a long time. And again, a bit like when it comes to equities trading, a bit more of a relaxed way of trading, which I think is always a good thing. But if you go to the website, you can find out more and sign up for that. Otherwise, we're done. Let's see where we are. Let's see where it all finishes, what these Euro markets look like next week. And I'll be back on whenever it is, Friday, and hopefully see you in that options webinar on Wednesday night, UK time. Okay, have a good weekend. Good luck with your trading, and see you next week.